So you've been seduced by the rags to riches stories from day trading and decide that day trading for a living is something that you're going to do. Even though statistics show that the odds are stacked against you and the success rate is extremely low, that's not going to stop you. Now, I'm not going to get into the basics such as your broker selection or the trading software you're going to need. You should know that, though, that you don't have to spend an arm and a leg because there's a lot of free trading software available, from your charting packages to your news feeds. Even your broker is going to offer you some freebies as part of your business relationship with them. Now, if you were to follow just the 6 steps I'm going to cover, you're going to be on your way to mastery of the 3 main areas that are necessary to succeed in trading: your method, your risk management, and of course, trade psychology. Now, are all 3 of those equal in importance? Well, if you've ever read any trading books like the Market Wizards that feature famous day traders, swing and position players, you probably read that the method used to find the setups is the least important variable of all. Risk management and psychology is their biggest asset. So now, while you're listening to this, it might spark some thinking on your own, so keep a notepad ready to jot down any thoughts that you're going to have. It's been said that you should never walk away from that moment of decision without doing something towards the goal, and there's really no time like the present to do just that. So stage 1, you got to figure out the reasons for wanting to day trade. Now, you got to establish this reason, and hopefully you've pruned your reason down to 3 simple words: to make money. Now realize that in order to achieve your reason for trading, you must accept the fact that you have to first learn to not only accept losing, but embrace it. So how do we do that? Well, by not losing the forest among the trees. In other words, understand that we make money from the edge that our trading system gives us over a big basket of trades. One trade is meaningless, as it's a large number of trades that are going to set you up for failure or your success. Now, your losses, if you're following your edge, will eventually lead to the winning trades. In order to actually accept the fact that you're going to lose, you must first learn to take internal ownership of the trading method you're using. And if you skip this important step, you'll just be taking a leap of faith thinking that the method will work without actually trusting it. It's going to rear its ugly head once in a while in a trade. You're not going to put your trust in your edge, and you're going to intervene in a trade based on emotions. And once you do that, you are no longer trading the system that you put your faith in through your testing. And this is how you end up like many who've come before you, and it's probably going to lead to your undoing. The second stage is accept how you make money trading. Look at a beginner's market where you can risk 2% or less per trade with like a $5,000 account. Many traders with a small account may appreciate markets like the YM, the NASDAQ, or even Forex when they start day trading. Why? Because you can trade one contract and your average risk per trade will be less than 2% per $5,000 account. Now, you can use any number of day trading strategies, but the key is that you must have faith that you've seen an edge in the system that you've chosen. And how do you accomplish that? You manually backtest. And make sure you backtest correctly. Now, you can do this by posting at least 100 trades, 200 is even better, in your spreadsheet. Witness the results of your backtest and take notes of the losses as they relate to the winners. Notice the key stats and results like the most consecutive losses and the largest drawdown period. And I refer to this as the 1-step back mode. And after you complete this, then take the 2 steps forward mode that follows. Take note of how your internal self reacted to the uncomfortable setups. Then notice the net profits that occurred through your 100+ trades, despite your discomfort and the losses that happened throughout. Now, you should be thinking, wow, this really does work. Well, now you're beginning to accept, you're beginning to believe, and you're beginning to take internal ownership of the system that will be your main tool for achieving the reason for trading, making money. But you have to be serious and realistic. Rome was not built in a day. So don't think you can take internal ownership by shortcutting this step. Backtesting is boring, and I still prefer doing it bar by bar. But without it, you're fully not going to trust in your trading system. There are only shortcuts to draining your trading account, not growing it. Realize that successful trading is not some place you just magically arrive at overnight. It's a day-to-day, trade after trade business journey. Number 3, practice makes perfect for beginners. So now you're ready to sim trade this market, and we're going to call this the forward testing phase. Now, sim trading is not the same as real trading, nor do we expect it to be, but it does serve a valuable purpose. It allows you to perfect your craft by learning how to execute your trades in real time, while still adding trades to your spreadsheet, building your data set even beyond your backtest. You're also reinforcing and perfecting your knowledge of your day trading rules and watching how they play out on the chart. Now, sim trade for a few weeks, or how long it takes you to have a firm understanding of how your trading system works, meaning that you can recognize all the trade setups and you can execute them. Now, this is the time you will feel you're ready to start trading with your live account, but not yet. Now, you may have heard this before, but I consider it one of those secret tips that most people don't know. Commit to taking 25 consecutive mistake-free trades live in your sim account before you top up your trading account and start trading live. And a mistake can be anything, including execution errors, second guessing, moving your stops and your targets outside of your plan, missing an entry, not adjusting around a key level. Now, if you make a mistake on a 24th trade, for example, you got to start over at number 1 again. So consider this your dress rehearsal. Now, make sure you're practicing with all the rules in full effect, including your cutoff time that you've chosen. And at Netpicks, we call this the power of quitting, and it's something you should really consider. Now, one of these often forgotten ingredients to long-term trading success is discipline. Now, by practicing how you will ultimately trade in reality, you'll be strengthening this critical aspect of your trade plan. So do not shortcut this process. Now, stage 5, it's time to start day trading live. So once you've achieved your 25 consecutive mistake-free trades while day trading your sim account, and you've tracked each and every one of them with your ever-growing spreadsheet, you'll now have seen how your system works over and over again. You'll have lived through the ever-repeating 2 steps forward, 1 step back routine enough times to adequately allow your inner self to claim that profound and deep internal ownership of your trade plan. And now you're almost ready to succeed, and you just might. You've learned that we make money based on the edge of our system. You've learned that losing trades and money is part of getting back on the winning side because your edge will play out. You've seen, even in your sim account, that emotions play a huge part in trading, and you're committing to lessening their hold on you. So you lean on your system, take your trades, because that is the only way to continually make money trading. Allow yourself to trade 1 contract only until you can take 25 mistake-free trades consecutively live with real money. You know the drill. Start back at 1 again if you make a mistake. Remember, this is real money now. Now, stage 6, monitor trade statistics and tweak your trading plan. Earn the rite of passage as a trader. At this point, you may begin trading with a standard 2% risk per trade if it suits your trading account. Establish your prior day's ending balance and use that to determine what a 2% risk would be and how many contracts you can take per the average trade risk of your chosen market and time frame. And as your count grows, so does the number of contracts you can trade. Again, keep it roughly in the 2% risk per yesterday's ending account balance. 2% risk combined with your winning edge will keep you on the winning track, provided that you trade accurately in an ever-increasing trading account. Backtest other markets and timeframes if and when you're ready to trade other markets following the plan we just talked about. Now, we need to keep a higher perspective by not focusing on just 1 or 2 trade results, so we'll not lose sight of our end game goal. With a 2 steps forward, 1 step back dynamic that will ensure our equity curve grows in a stair-step manner, we fully expect to lose. We've accepted our way of making money day trading, and we've learned that we must sacrifice 1/3 of all of our trades to get that 2/3 that satisfy our reason for trading, which is to make money. And if you do wind up losing your way, just stop, take a step backwards, reevaluate, go back to stage 1 and just start all over again. Options trading has become very popular over the last few years. Netpicks' own options guru Mike has put together a hot list of some of the best names to trade in the options market. You can click here and download your free hot list to see what names Mike has been piling up the winners with.